All right, welcome. This is Tim Judge, founder of Home Search TV, also associate broker at EXP now, and part of the GLR home team. Very excited to bring you one of our favorite mortgage brokers, Skolnick. Did I say that right?
Yes, you did, Tim. Good morning.
All right, good to see you again, Saul. Saul's usually on our weekly calls and updating us, keeping us updated, but we wanted to get this out to the broader audiences. We want to talk about mortgages, and I did click on the link you sent, which was to a book you've written.
Correct.
And you are the professor of what is that? The mortgage loan professor?
Home loan professor.
Professor Home Loan. There you go. Very good. Well, welcome, and thank you. Yeah, this is part of the page there from United Mortgage. And it has all your stuff, which is linked inside, of course, the comments of this video itself. But why don't you tell us a little bit about, you have decades of experience as well. So tell us what you see going on.
Okay. Thank you very much, Tim, and welcome to everybody. The market is a little confused in that there is less inventory than people would like there to be, although that certainly in places like Westchester and Fairfield County was true before the pandemic. There was not enough available, and that got worse, obviously, during the pandemic when people from the cities were willing to buy almost anything they could get their hands on and distorted the pattern. What we're seeing now is some return to regularity, although two of the things that typically will happen in the market, especially in the spring into September, is that people moving in looking for schools would buy homes that are being vacated by the people who have empty nested, who would typically be looking to downsize, maybe not mowing their lawn, moving to a condo, moving to something with fewer square feet, not necessarily moving out of New York and Connecticut. I mean, yes, there are people moving down south. That's always happened. But so a lot of the homes that would otherwise be available are not, because if somebody thinks they're downsizing and find out it costs them almost as much to move sideways at this point, they may not do it. And also, again, although rates will change and rates will go up and rates will go down, a lot of those people would be moving out of homes where they have a 3 or 3.5% interest rate. In the current market, they're going to be somewhere between 6 and 7. Again, it's going to be individual, but that would be the range. And so they may see that as not desirable. So that is clogged what should be the inventory flow in one of the ways. And then again, there were never enough houses built to accommodate the number of people that were going to need them after the crash of 2008. And although there are people trying to catch up, they're not going to catch up in the next 5 or 10 years. Just right. You can't build fast enough.
Yeah. And what are the projections, if you know, on how long it would take for that to balance out? I mean, we have the silver tsunami, they say, which are, the biggest generation is at the top now, right? So they'll be moving on to other places. How is that going to affect? Because then you have X, which is smaller, and then millennials, which is a rather large generation. When do they see that kind of evening out?
I don't think that they really do, unless the government really puts money into it and builds houses in a way that they wouldn't normally, because the baby boomer generation is about 40% of the market. The millennials are about 35% of the market. They're not moving in that place fast enough. Again, it's going to change slowly. If it does change, the older people need to feel that there's somewhere for them to go while they're still alive. And again, since, these are people who may have retired in their early to mid 60s, who will live to 75 or 80 years old on average. So they're looking at something to move into. So again, it depends very much on where you're looking. If you're in Dubuque or Keokuk, Iowa, there's a little bit more flexibility. If you're talking about Westchester County or Fairfield, these are places that have been desirable both for lack of distance from the city, as well as school districts for decades. I mean, that's very typical.
Right, right. And as you mentioned, they're just not making any more real estate. So it becomes tough when the sideways move or downsizing doesn't make any sense to your pocketbook.
Right.
People really need motivation for that stuff to happen. To move from where they've been for 10, 15, 20 years or more. To make that move just has to be beneficial. And I think the pocketbook is really the main reason. Nobody really wants to leave their lifetime home unless it's a good reason.
Sure.
Yeah, and I do have a list of things. I know you don't like to set them, but as far as a basis for what people are looking at, these change by the day, by the hour, as the wind blows. Just to see. Now, do you have any other special programs or specific programs? Because everybody knows 30 years, 15 years, and adjustable rates, and you see these rates, and it of course depends on a lot of factors. Can you go into some of those factors, maybe the top 2 or 3 most important factors, and then maybe a special product that you have that could be working in people's favor?
Sure. So the factors are going to be your credit score, your FICO score.
Right.
So when you have one person who is applying on their own, the bank's going to pull all 3 credit reports, and they're going to take the middle one and use that number. If there are multiple lenders, husband and wife, brother and sister, whatever it may be, moving in together as a residence, the bank will go to the lower of the middle. So you've got the FICO score as part of it. The loan to value, how much money you're putting in as a down payment in relationship to the cost of the house, is another factor that's going to weigh on the interest rate. And then what's called your debt to income ratio, how much you have borrowed so far and how much additional you'll be borrowing after you make the purchase in relationship to your income. So those 3 factors go into the cost of the rate. So when somebody sees a 30-year fixed at 6.31%, that's typically an average number that is being used in an average place throughout the country. And since we're in, 2 or 3 amongst the top 10 most expensive markets in the country, typically that's not going to be true here, although you can always what's called buy down the rate by paying small increments to make it lower if it makes sense to you, dollars and cents. In terms of programs, it's more about how people create their money. So when you're getting what's called a conventional loan from a Bank of America or Chase Manhattan or Citibank, they're basically looking at people who have W-2s, who have showing their tax returns for the last 2 years. Since more and more people have become either self-employed or gig workers or create income in other ways, what's really happened is there are now programs from banks like mine, which are lenders only. We don't do what we're called a non-depository. We don't have checking accounts. We don't do anything except lend money. And so it's possible for somebody who's self-employed to show us their business's profit and loss statement from the last 12 months instead of income tax returns, which would show lower when they've taken off deductions as part of it. It's possible for them to show bank statements. So there are now a wider variety of programs to accommodate the fact that people earn money in many different ways, more than anything else.
Yeah, beautiful. That's exciting that your bank is just a lender. And do you lend nationwide? How big a market do you cover?
We lend everywhere except Alaska and Hawaii. I specialize in the states of Connecticut and New York and the state of Florida, although I have people who I can refer you to so that you can get the benefit of what we do. And United has been around since 1991, purely as a lender, has a very good reputation for what we do and is going to be price competitive across the board. And again, we're going to have a large number of programs in addition to the fixed 30 and 15 for conventional W-2 people. We're going to have lots of other things. We also have the ability for people who are looking for investment properties, 1 to 4, so residents, to actually not even show us any income, and they don't need to be employed. If we can see what the place they're buying can produce as income in relationship to the cost, we can do it based on that. So it's like a commercial mortgage in terms of what is the cash flow, without having to look at your other businesses. They're not important as long as that 1 through 4 unit has leases or can have leases at a certain amount.
Right. So you go over the market rates of those units, and then you'll be able to calculate how much you can loan on that property.
Correct.
And then I'm assuming that the person purchasing is expected to be one of the tenants?
No, actually, they can't be one of the tenants.
They can't. Oh, okay.
It's purely as an investment. If they're going to be the tenant, then it's their primary residence, and then the other rules will follow.
Oh, okay.
It's a pure investment, which means you don't live there. You're doing it purely as a business. We can take care of it that way.
And what's the general money down on that situation?
It's going to run 20 to 25%, sometimes a little more. It's going to depend on the loan amount, but you can clearly buy something for $1 million or $1.2 million with 25% down payment, showing that the income created by the leases will take care of the principal, interest, taxes, insurance.
All on cash flow. Yeah, that's nice. Then it doesn't bring anything in from outside except for the property itself, which is great. Wonderful. And I was showing off the website there, and of course your Facebook page. I don't know how active you are on Facebook or the other socials. I know that's in your contact information there.
Sure.
But one of the and just for point of reference, I also was going to show off this that that because it's flexible, people who are using 5% or 6%, you can see that it's $2,147 is the monthly payment versus $2,398 for that. And then we used to have some 7+ rates going out there, which is 26. So you could see how much that affects your monthly payment. The other part we wanted to talk to you about was your book that you have written, which makes you the professor. You had a couple things to do, which I think you went over, but I think it was 10 things that you should never do when you're applying for a mortgage. What's the most earmarked page in that book right there?
Well, I mean, people walk through and want to know what to do, but the things that not to do, and especially because common sense and the way mortgages work don't always coincide. So a lot of people think if they close some of their accounts, they will look better because they have less available debt. It works exactly in the opposite fashion. If you close down, for argument's sake, a couple of your credit cards where you had a limit of $5,000 or $6,000 and little or no debt, if you close those down, all of a sudden your debt to income ratio increases and you are less attractive to a lender. So one of the things is don't close any accounts when you're ready to apply, because the credit score that the bank is looking at is based on all of those being open and that amount of available credit for you. So that's one of the things. The other thing is if people are entitled to get gifts from relatives to make a purchase. They will be asked to make a letter showing where the money came from, and the person who's given it to them will have to prove that, and then you have to show that it's been received. People can't give you cash because the bank is thinking that it might be from a loan, it might be from laundered money, whatever they're thinking. But so in other words, when you're getting a gift, which is perfectly admissible almost 99% of the time, it's got to be verifiable where the money was for the last 2 months and that you've received it. And the letter is indicating from the person who's gifting it to you that they have no intention of ever recovering it. So that's another thing to be aware of. The things to do really include getting an attorney. Now, not every state requires an attorney. New York certainly does, but you're going to be going to contract. And when you're going into a real estate contract, each state, each municipality has their own little traces of how that's supposed to work. So having somebody who does this all the time, who protects you in that way, is very important. The other thing that I always recommend is that somebody needs a buyer's real estate agent. And we know that recently there have been some changes in the way that the buyer is paying for that, and I'm not going to go too deeply because it really hasn't been fixed. Nobody knows exactly what can happen. We do know that up until 4 months ago, the seller would typically pay for both agents. We know that that's now not the way it's going to be unless the seller decides, and they can certainly do that, but they have the opportunity of saying no, which means the buyer has to figure out where the money's coming from. The most important thing, though, about a buyer's agent is they're going to have access to information that even the best investigator as a purchaser isn't going to be able to come out of online and figure out. They're going to know what the neighborhood's like. They're going to know what the school district is like in terms of reputation, and where they can't say it's good, bad, or indifferent, but they can show you the information that will give you the numbers that make you comfortable about that being the school district you want to be in. They can tell you, how many people might commute, what's the average income, all kinds of things about neighborhoods and places. And then they're going to be able to look at the homes that are available and be able to cull down, based on what you say you want, the things that will make sense for you to spend your time looking at. And really only a buyer's agent is capable of doing that in an effective and efficient way.
Yeah. My 2 cents on that, it's just aggressive disclosure. As far as commissions are concerned, and that was the whole basis of what was happening, that the buyers didn't realize that they were ultimately paying because it got financed into the deal itself, and they never felt, or it was believed that they didn't feel like they had enough control or negotiating power in that situation. They always did. I have had situations where my commission was negotiated late in the game, as on the buyer side, because of something that went on inside the deal. So it's never been frowned upon. I mean, or not accepted, or could it kill a deal? Sure, it could, but it was always disclosed that your commissions are negotiable, and how they get paid out is really what happens now, that the buyers have to acknowledge that they're responsible if the seller is not going to take that as part of the offer. So basically it has to be part of the offer, and you have to agree with your buyer, and me as an agent have to agree with the buyer about what that might be, and could it be negotiable, towards the end of the deal, or depending on what's going on. It always is. So, it's aggressive disclosure. I like to say, but it hasn't really changed much about what happens. But the mechanics of that have to change, because that's the rule, that you have to have these disclosures signed. So it's just more paperwork to sign, but it's always worked that way.
Right. In an age of no paper, we always have more paper.
Yeah, exactly. In efforts to reduce paperwork, they're making more. I think the Fed is meeting today, or there's going to be. Do you have any kind of inkling about what might be happening out of that?
No, because everything I looked at yesterday contradicted each other. I mean, there were some of the governors who wanted to go down, some of the governors who said sit tight. So we'll see shortly. If they do go down, I'm sure it's going to be a quarter, not more than the way it was last time. I want to go back to the book for just a second, because it's available to everybody for free. It's called A Step-by-Step Guide to Financing Your Home, and there is a link where you can get a digital version of it to read, which I'm happy for people to do. The other thing I wanted to talk about when people are thinking about purchasing is we talk about pre-approvals and pre-qualifications. And I know that most real estate agents will require that before they're going to take somebody out, because they want to make sure that you can indeed make this purchase if it comes to be. Those words don't mean anything by themselves. In other words, a pre-qualification, a pre-approval, depending on the institution, is going to have different requirements. The one thing that is unassailable is what's called a TBD, or to be determined pre-approval. And that's where the lender will actually take all of your information and have it approved by an underwriter without you picking a property. So typically a pre-approval has at the very bottom of it, this is not a commitment to lend. We have looked at blah, 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 and we think approximately is right. There are lenders like mine, and this is a little self-serving, but there are others do it well, doing
Yep.
what's called this TBD, which means after we take all of your information and before you have found any house, we will take it to an underwriter and we will give you an actual commitment. It is as
Right.
close to cash in terms of competing with cash buyers as you're going to get if you need financing. Because it's very clear. It says, as long as the house ultimately appraises, we have approved you. We're going to lend you $811,307.
In as a perspective of the deals that you've been doing and seeing, how much has that paperwork or cash buyers have affected the deals that you've been involved in? Has it been do you see still a lot of houses going to multiple bids and then this paperwork, the TBD paperwork,
Mm.
or all cash offers? Still, obviously all cash offers hold some weight, but usually they're a little less on the number side. So when you get a TBD number, knowing that you're going to be able to close pretty quickly, that
Yep.
should be aggressive as well. So you can still take a higher number because everyone's negotiating the number as well as, how qualified and how quickly they can close. It's always very important. So as far as the last, few deals you've seen coming through this fall, how important are those numbers
Well, at the
for
moment,
the
what I'm
paperwork?
seeing is that on the very expensive homes, sort of a million, 2 million and above, still seeing a lot of cash deals,
Mm,
interestingly enough. On the ones that are below that, where people would typically be looking at a 20% down payment, I am seeing folks who can get them a TBD or a very, very valid pre-approval being able to be equal to cash buyers, but there are fewer cash buyers at that level
mm,
at the moment. And during the pandemic, it went wild. I mean, nobody
yeah.
expected, nobody had seen anything like that. I think it is evening out a bit more. So if you're, again, in the markets we're talking about, if you're looking at a purchase of a million or less, more and more people are coming back with financing and a document that says I'm qualified to do this or I'm approved to do this. And that works pretty well. In the very expensive home, I just see people walking in with the biggest wheelbarrows of cash I've ever seen.
Yeah, it must be nice. I don't have any of those wheelbarrows around my place.
I've seen pictures of them. I don't have one.
Yeah, exactly, exactly. Um, you mentioned, high-end properties, luxury properties, so properties over 1 million. I believe, correct me if I'm wrong, they just upped the conforming rate and jumbo
Yes.
rate is higher. That level is now, is it 816?
Yes,
Um,
816 brings it to conforming. So in other words, you would go to a jumbo loan after that in
mhm,
terms of dollars and cents. And again, depending on the lender, many times the jumbo rate is a little bit lower than the conforming rate because the conforming rate is controlled more often than not by Fannie and Freddie. And an individual lender who is then going to put the jumbo loan in their portfolio might be able to make a slightly lower rate. That's going to depend totally on the lender. Again, when in a normal purchase, you're not thinking, a normal buyer isn't thinking about conforming in jumbo. They're thinking about how many dollars do they have to put down, how many dollars do they need to earn. So it really is a matter of saying to each lender, what's your rate at conforming, what's your rate at jumbo, and then does making a larger down payment to get it down make sense, or leaving it at slightly lower and going with the jumbo makes sense. And that's something that each potential purchaser should be asking the loan professional that they're dealing with when they're on the phone or in person.
right. Beautiful. What would be the proper time frame? Because I usually and of course bringing buyers out and they've all seen something on Zillow, Realtor.com or wherever, but their mortgages, their mortgage finances and everything are not in line yet. How early would you start that process based on when someone wants to move?
I suggest to people that at least 3 months before they even think about going out to look,
Right.
that they look at their what they have, what do their credit
Mm,
scores look like, what kind of assets will they have, what does their income look like. And again, any good loan professional will be happy to walk them through that process and give them some sense of where that puts them in terms of current rate and in terms of being able to be attached to a program. People that, on Friday think they're going to get a pre-approval and go out buy on Saturday are usually going to be run over at this point. It's
Yeah.
something you need to plan for ahead of time, especially because if your credit scores need to be improved, or if you need to have more assets, you can't do that overnight. It takes time. It's doable, but you need the time to do that, working with a loan professional who can help you do certain things that will improve your overall perspective.
Yeah. And does your company offer any kind of credit counseling or repair options that
We
might come
certainly
up?
we will recommend three groups of people for credit repair and
Okay.
counseling. We will always recommend three people as a referral for you to choose who makes sense for you. We don't do that work, but we certainly will work with people who have and companies who have done that over a long period of time. And we're comfortable at saying, if you talk to these companies, you should come back with somebody that makes you comfortable. And that work is often worthwhile because it will help lower the rate, or it can make the difference between being approved or being set aside.
Yeah. Beautiful. So again, there's no application fee or anything up front when somebody wants to, if I have a buyer that wants to do this and I recommend you, there's no fees or anything involved to start that deep dive.
No, there shouldn't be. If somebody wants an application fee or a pre-approval fee, you should walk away, because by law, the only thing we're allowed to ask you to pay for at the beginning is the appraisal, but that would require you to have a property. So if you're in the pre-approval part of it, there is nothing that I can ask you to pay for.
No credit check fee or anything like that?
No, at that
Deal with
point, the bank is paying for it and laying that money out. And if you close, the bank will get that money back, and that's going to be clearly written out, in the documents that show what your costs are.
So I'm just trying to hammer in the point that there's no reason not to start early.
Absolutely. There's no cost to do it, and there's only value in it for a potential purchaser, because if you're working with a lender that knows how to help you move forward and get better, you're going to have an easier time when you go to make the bid.
Excellent. Well, that was all great stuff, and thank you very much, and thank you for providing that link to the free book. I encourage everyone to click that link, because it's a really great resource for you to go step by step through your journey, and everything you have there. If you order the book directly, you can take notes in there and make sure you got everything down like a checklist. So I highly recommend that. That'd be a great thing. Any final thoughts, Saul, or any whirlwind news that you see coming in the spring that's going to change everything?
As they say, it's really day by day. I think the most important thing for people to understand is two things don't go away: real estate and money. So, and that will, vary. If you're waiting for the rates to go down, don't wait, because rates do change, and you can refinance literally 6 months after you've made the purchase, or you can find other ways to bring money in. If you really need to be buying a home, please understand that 95% of the time in the last 50 years, the cost of homes have gone up. They're not going to go down, again, in the areas we're talking about, which have been very desirable for centuries. And there's no question. I mean, I live in a town in Pleasantville, New York. People have been living here since 1695. I've bought a house that's 200 years old. I actually got the information about the original people that owned it and what they paid for it. I couldn't pay for the gas to drive my car up the driveway with what they paid for it. And again, we know that that's going to go up, and the rates are going to go up and down, and you can work with it.
Yeah. The biggest thing is that the inventory is crazy low, and you don't have tremendous amount of choices and or opportunities to make deals, because they go relatively quickly. Besides the inventory being low, your option to make a deal, the window is very tight. So if you're going to start looking, first of all, get yourself pre-approved, so you're looking at the right things, and then make sure that you are ready to pull the trigger when that happens, because things don't last very long and other options don't come up as quick as you think they do. So if you're out and about and looking, just be ready, be prepared.
Absolutely.
That's the best thing to do. Well, thank you very much for your time, Saul. I've been streaming your contact information underneath there. I got that right. 914-380-0600.
Perfect.
And
Everything there is exactly right.
Excellent.
Thank you
Professor
so
Home
much.
Loan. Make sure everybody picks up that book. It'll help you greatly. And of course, if you're in need of a mortgage or any kind of mortgage information, I'm sure so I'll be happy to help you out. But thanks again.
Tim, thank you very much for the opportunity. I appreciate it.
My pleasure. Thank you, everybody. Have a good one.